Hey guys, good evening. Dave Santarelli here from OptionsTradingCollege.com and Santarelli School of Options. First, I wanted to start off here tonight with the market is continuing to see a massive sell-off. We have Dow futures down over 1,000 points. I think we're down a little bit more than that right now. Let me take a look here. Uh, we're down about 1,100 points right now as we stand. And it's currently 2:27 a.m. here. I recorded a class previously, and then Zoom told me my storage was up, so I had to go in there and delete because I've been recording a lot of these daily classes here, the live streams, and I had to go in there and delete them. So as we're seeing here, I mean, look at Nasdaq down 821 points. We have the S&P down 189 points. Dow's down 1,111. That can't be accurate there, down 187. There's no way that's accurate. But definitely seeing the markets continue to sell off here. And we're having SPY right now. Well, SPY is selling off. Wow, there is a massive pullback coming in right now. SPY is at 484.64 right now. And we're at lows of the after midnight here. So as we can see, futures are continuing to pull back here. Now, what's driving this sell-off? So first off, let's take a look at these charts. I mean, we've seen nothing but a sell-off here since we entered our BDM cycle with our trade plan, which was the MACD cross below right here, trading below the zero line on the histogram of the moving average convergence divergence, the 10-day simple moving average crossing below that 20-day simple moving average. We held below that 10 the entire time, got up to the blue 20, rejected, and started to fail and pull back again. Now, tariffs are in place, but let's talk about first off, where's the next support levels? This was as of the close on Friday, 5:05. We're currently at 484, which means we are right here right now. I think we're going to see a little bit of a bottom right around that 475. So I'm expecting Monday that we could possibly see that 475. The reason why I say I feel like we're going to continue to pull back here is we are seeing, let me pull it up right here. You can see on the news wire right here. Japan's futures were halted on a circuit breaker here as they were down 8.8%. The Chinese market, the Hong Kong market there was down 11%. I'd probably have to go back a little bit further here. S&P fell 9.1% last week, but we also saw the Hong Kong market there down about 11%. We're seeing the Japanese futures get absolutely destroyed here. SPY is down right now 4.1% in, you could call it pre-market hours right now, 4.1%. So I think we're going to get down to that 475 today. If we drop below that 475, where is that next support that we've been talking about? We're going to see that 450 and then that 425 to 400 is going to be where I call a bottom in the market here. That SPY would need about a 53% climb from that 400 back to that 613 we were at to get back up to all-time highs. Now, here's the reason why I've been calling this market sell-off for so long, and I still feel like it's going to continue to pull back. Number one, what I want you guys to understand is what is causing the mass sell-off here. Listen in on this. I have a notepad right here I was writing down, and I was going to do a PowerPoint here, but then after that last class there, the recording was not recorded. So I'm doing this one here. I have my notepad. So what's causing the mass sell-off in the market right now? First off, when Trump came into office, we already had poor economic conditions to begin with. Delinquencies were starting to climb, and we were also seeing the deficit continue to climb. And we were definitely having issues with paying our interest on our debt. And that's the whole point of Trump taking the action that he's taken right now of cutting the government, cutting the spending, is try to save us from this economic collapse that we were going into. Because all we were doing before was spending, spending, spending. So yes, I understand what Trump is trying to do, but he couldn't have done it at the worst possible time for the markets. Okay, so what's causing the mass sell-off? Like I said, number one, we had poor economic conditions for Trump to start with. Okay, this was followed by a mass blue collar Fed jobs cut. We had Elon Musk going in there with Dodge and cutting all these federal jobs. These were blue collar, middle class jobs here. You got 100,000 jobs right there cut. This was followed by NATO remarks by Trump saying that if they didn't pay up, that, that he's not going to protect them. That started to rally our allies there and started to anger them. Next was followed by these massive large tariffs and a tight economy that we already had. We had a tight economy going into what happened here, before the election. Economy was tight. Consumer spending was continuing to climb at record all-time highs. Delinquencies were starting here. So the tariffs couldn't have happened at a worse time. We had inflation still high, and now with these tariffs, it's going to cause increased inflation. Now, how much inflation are we talking about right here? I mean, this is what's crazy. Take a look at this. Right now, Chinese markets, the baseline 10% tariffs took effect Saturday, with dozens of countries facing higher so-called reciprocal tariffs beginning Wednesday. So when Trump just put those tariffs into place on Tuesday, China then came out on Friday and said it's going to impose a 34% tariff on all goods imported from the United States beginning this Thursday. So that means this Thursday coming up, it's going to be another insane day, because then all of a sudden we're going to about 54% in tariffs. So everything we get from China is going to be up 54%. Now, here's the next big problem. Trump already announced that he's going to do reciprocal tariffs on China. So China just raised the tariffs 34%. We're at 54% right now. 54% tariffs as of right now. So 54% tariffs. Now, if Trump goes in there and retaliates and puts another 34% on there, you're at 88% tariffs from China. Now, that's what's causing the market to freaking really sell off and have a lot of fear here. Number one is economic growth is absolutely going to shutter here with 88% tariffs on goods that we get from China. That's going to be starting this Thursday. So you have to remember the events that are coming up here when we're talking about them going on with the stream here. So 54% tariffs. We didn't even see that yet. We didn't see that reflected in the markets or on the shelves or at the stores yet. That's still to come. So, why do I feel like we're going to continue to sell off? Well, the economic conditions are continuing to worsen and the trade war is really heating up. Okay, this is going to raise prices and inflation is going to drastically increase here over the next 2 months. So, short term, you might get a little dead cat bounce here after have a sharp pullback. We were down almost 10% last week, and we're down another 5% to start off the week already. We're all the way down towards that 483 level right now on SPY. So when the markets open up, we're going to be opening in that 480 range, at least somewhere in that range, maybe even a little bit lower here, depending on what futures do. But we're continuing to see that sell off. Now, this is why I don't want you to jump into SPY puts right now if you're not already in them. We just had a 15% pullback in the last 4 days of the trading days. So last 4 trading days, we pulled back about 15%. There's going to be a little bit of a climb here. So now what I want to do is draw out what I'm looking at here. So tomorrow when we open, we are going to be right down here. We're going to have a big candle and we're going to be at least here, maybe even down to that 475. This is going to be support number 1. Okay. Now here's the thing. What I'm expecting after this large pullback from right here to where we're at right now, we dropped down 15% in the past 4 days. So that tells me that we might see a little bit of what they call a dead cat bounce, where you might get a little bit of a climb per our trade plan, following that back up to maybe towards that 525, which is going to be that next area of resistance right around that 525. So we might get a climb like that up to it. And then all along, these simple moving averages are going to continue the way they were moving. So we'll see that 10-day simple moving average continue to come down like that. And then obviously we're going to continue to see We're going to continue to see the blue continue to pull back here as well. Where's the blue candle? And then we're eventually going to see this. And then we're eventually going to see the red there as well. So, I could see us getting up to that resistance right here and then starting to see that next larger pullback. So if this is Monday's candle right here could be Tuesdays, here could be Wednesdays, and then possibly Thursday when those next rounds of tariffs come in, then we drop down to support and we could possibly see that further pullback here. So right now, we've been taking advantage of the market pullback for quite some time right now. So we had a large pullback. And right now, we might see a little bit of a bounce after tomorrow. We could definitely come to a conclusion here when we start seeing foreign markets. That's the one nice thing about watching the foreign markets here. They open before us. So if we're looking at the foreign markets selling off there in the pre-markets, and when we're starting our trading day, likely we're going to see that continued sell off as well. Now, if we see the European markets and all these foreign markets start to get a climb, in futures early on, like midnight, 4 a.m., tomorrow, and we start to see them climb, then I'd be saying, okay, we're going to get a climb back on SPY up to that resistance, and then see that next wave of selling pressure coming in, because we just had a 15% pullback. So the reason why I'm telling you that is I don't want you jumping into SPY puts right now after we've been down 15%, and then we go from where we're currently at right now. SPY's at or I'm sorry, 483 right now. 483. So SPY's all the way down here right now. I don't want you jumping in on open and then us seeing a climb back up to 500, possibly even up towards that 525, and then seeing that next rejection. Right now, if you're going to be trading, you got to trade the volatility throughout the day. So we have our streams, 9:30 to 11 and 3 to 4. We're to be day trading that volatility that we're seeing in the market and continue to see that selling pressure coming in there. Now let me get up my thing here. Let me just get up E-Trade here. I'm going to show you what we have on right now. Well, I'm waiting for this to load here. What I want you guys to also understand there, we were talking about retaliatory tariffs then. We were talking about inflation drastically increasing over the next 2 months with the data that's going to be coming in. We're going to see job loss. We're going to see inflation, CPI, PPI numbers continue to climb. They're coming up this Thursday as well. So that's going to be a big one there. And then here's what we're currently holding right now. We got a few SPY trades. And you guys remember this one I was talking about in last class here as well. SDS shares. This one, obviously it's ultra short S&P 500. So as the market pulls back, this is going to make money. SDS. Not only does it make money as the market pulls back, it's already up 18.38%. That's as of the close on Friday. It's going to be up probably about 25% or more on the open of Monday here. So I'll be up about 25% on that right there. Here's our SPY put that's currently up 138%, and that's not even given today's pullback yet, because this isn't going to show the value of that until about 9:30 when markets open. So we have the June monthly 540 strike put. I've been holding on to that one for quite some time. That one's already up 138%. This is going to be up probably close to about 220% on open. So we're going to see some really nice profits on that. First thing, the SDS shares going to be profiting very nice from. And then we also on Robinhood here, we also have, let me get that up here. So we also have this trade, which is the SPY We have the SPY 495 strike put, and that one there is for, let's see, on Robinhood. I just started putting some money into Robinhood because they've been doing some really great offers here. Trying to transfer some here. There we go. Okay, so that's for the 8th. So that's Tuesday's expiration. It's up 123% right now. That's our 495 strike SPY put that we picked up on Friday. It's already up 123%. So we should have about 150% on that on the open. That's looking phenomenal. And then we also have, get it up here. We also have this contract that we just picked up on SPY. That's up about 21%. So this is the SPY April monthly expo, the 510 strike. We picked that up on Friday. It's already up 21% as of close on Friday. That's going to be up about 100% on the open Monday morning. So all of our SPY puts that we have are going to be up well over 100 to 180%, maybe a little bit more on that June expiration. So we've been nailing it with our SPY puts. Markets continuing to sell off. And like I said, what's causing the mass sell off? The poor economic conditions to start with Trump's presidency, followed by the mass blue collar Fed jobs cut, followed by the NATO remarks that really rallied up our allies there, and really they started telling all their citizens and companies to divest from the United States. Stop investing in the United States. Take your money out. They said United States is no longer friendly with us. So that's causing a lot of flow out of our markets and back into international stocks and ETFs. So, that's really hurting our markets here quite a bit by our NATO members telling citizens and businesses to stop investing in the U.S. markets, to divest, take their money out, and have national what do you call it there? Momentum for each other. They want to stand for their own country, so their government's telling them to invest in their own country there. This is going to cause prices to raise crazy after Thursday. We're not even seeing any of these price fluctuations that are inflected into the market yet or on the shelves. I mean, that's not on the shelves yet. You're not seeing any of those prices. So when that starts, we're going to start seeing a larger pullback there because we have delinquencies, mortgages, car loans, all at record highs now that we haven't seen since 2008 financial crisis. So, I mean, that's absolutely insane. Think of that. We're going back to those types of levels right now. So we're having delinquencies, mortgages, highest delinquencies since 2008. Car loans and notes, highest delinquency since 2008. The retaliatory tariffs by these foreign countries right now, based on our country's tariffs last Tuesday, all these retaliatory tariffs are going to be kicking in this week. On Thursday from China, that's going to cause a spike of 54% on the shelves there from all of our Chinese products that we buy. Now, is the United States going to announce that same 34%? Then we're at 88% tariffs from China. Okay. We have high interest rates. Jerome Powell is going to be coming up in a few weeks here and announcing if there's going to be a rate cut. If we don't have a rate cut, I mean, market conditions are going to deteriorate and drop rapidly. If there's no rate cut, the market's going to have that next leg lower. If we do have a rate cut, we might get a little bit of a relief rally back up to that resistance. Okay. So those are the major market conditions that we're seeing right now that's making our markets continue to pull back. We have tariffs that are shocking the global economy. Obviously we already had high inflation. We had high interest rates, so people and consumers were already struggling and feeling the pinch. Now you're going to tack on about 50% on the shelves in the coming weeks here, especially from Chinese goods. Now, we still have to see about the other countries if they're going to retaliate as well. And then if the United States is going to retaliate on China's 34%, because Trump did say whatever other countries did, he would do the same because he wants a fair trade deal. So if we slap them with 34% and we're at 88% tariffs on Chinese products, the market is going to shake to the core here, and we're going to quickly come back down to that 420, anywhere between 450 to 400. I think we're easily and quickly going to see. I mean, from 2024, we went from 415 all the way up to 613 points right here on SPY. So, this is all just a buffer right here. We could quickly see all those profits locked in and get right back down to that 450 to that 400 level. And then depending on how long tariffs last here, if tariffs last the rest of the year, I could definitely see SPY coming down to that 350. That's going to be our base support. If we did get down to that 350, I'd be a buyer in the market and I'd be adding there. Right now, we got to take advantage of a pullback. We're going to be selling our SPY puts first thing in the morning. I don't think, well, not first thing. I'm probably going to give it the first half hour there. Then I'll look to sell the SPY puts that we have. And then if we start to get a climb there Tuesday, I'll wait until we get up to that resistance before I make that next swing trade. So for swing trades, we're waiting for getting up to that resistance like we did right here. And we talked about that all throughout this pullback here, and then that climb up to that blue 20. And then when we're rejected and had that double bottom at 550 right here, we called that. We called that double bottom at 550 when we had that sharp pullback in our BDM breakdown momentum cycle. We got up to resistance right at that blue 20-day simple moving average. That's the 20-day SMA, the blue. And then the yellow here is the 10-day simple moving average. And then the red right here is the 50-day SMA, 50-day simple moving average. Okay. So that's what those stand for. Now, again, we had that breakdown momentum. We got down to a base support of 550. We climbed from that up to that blue 20-day simple moving average per our trade plan. Got up to that blue 20, and then we rejected and we pulled back. And we faced that double bottom right at that 550. Then we got that little bit of a climb. We made a lower high. Notice here was our high when we climbed off of support right here. So when we got that climb up to that blue 20-day simple moving average, failed, rejected, started pulling back, and then we dropped below this support at that 550. That's telling you the sign of the next pullback where you could be looking for that next support area. So then we had that pullback, continue to pull back. Now we're down to that right now. Let's see what SPY's at. SPY right now, let's see here. SPY is at 481. Wow, we're continuing to see futures selling off. 481.10 on SPY. I mean, that's absolutely insane. We're into the 480 now range on SPY. Let's see what these contracts are estimated at. I just showed you a little bit before there. What were they at? Are they still up there? We were up 123% right now. If I refresh that, we're up 151% on those SPY puts. 153% now, and they're just continuing. I mean, the market's continuing to pull back, but you can see that we're profiting. This continues to go higher as the market pulls back here because we're short the market. So we're continuing to see some nice profits as the futures continue to sell off. So getting back to the SPY chart right now, I could see us having that pullback that we're having right now, getting down to that support that we've been talking about literally for months now. And we've been talking about that next level being at that 475. So that 475 is going to be that next support. After that 475, 450, 425, and 400 we'd be looking at. So right now we're going to see a candle like this tomorrow on SPY on the daily chart. Now here's why I don't want to jump into SPY puts, as a swing trade, because we just dropped about 17% right now. So I don't want to get a climb off that bottom like this for a couple of days and then see that rejection. Because, if we get back up to that 520, I mean, that's a big ways away from where we're at right now at 480. I mean, that's almost a 10% move in the markets right there. So what I want to do is wait for the next swing trade, take advantage of intraday volatility with day trades and scalps. And then once we see us get up to that resistance and then see that next red candle below previous candle's body, See how this one engulfs that previous one and is below it? Then I'd be looking for that next larger pullback and continue to trade to the downside here. So for the next swing trade, we got to wait until we get up to resistance, start that failure, reject, see the candle below previous candle's body, and then we're going to swing trade that for a few days looking for that next support. Okay. Once we start getting a climb there, we could certainly look for like a day out trade, 2 days out, and then trade SPY up to that resistance. But the safest thing for right now, we're going to be locking in our SPY puts, locking in a massive gain on those. And then we're going to be trading. I mean, intraday tomorrow, we're going to see some massive moves. So if we come in here and look at the today 1 minute chart on SPY, let's just take a look at some of the opportunities that you had throughout the day with SPY. I mean, this is a minute chart on SPY here. And as you can see, I mean, just look at these areas when you get that BDM cycle where the 10 crosses below the 20, the MACD cross is down below right here. I mean, this is our trade plan in focus right here. And as you can see, here is the MACD cross below. Here's the 1020 cross below, MACD cross below right here. It started trading below zero. We had a sharp pullback right here, and this is all in the intraday 1 minute chart. And then look at what we did. We got up to that blue 20-day simple moving average, and then we started pulling back and holding below that yellow 10-day simple moving average, had that next large pullback. And then a sign that your that breakdown momentum is over. The MACD cross trading above zero line on the histogram of the MACD, and you're seeing the size of those bars on the histogram of the MACD. They're much larger than you were in that BDM cycle or the previous bomb cycle. So that's showing you that there's some volume starting to step in. You're going to have that big quick climb there, and you could be exiting out of that trade. So here was your entry on a SPY put intraday 1 minute right around 10 a.m. And then you were out of that trade here when you had that 1020 cross. That was your absolute latest. You already saw the MACD cross here. So that's your first sign of getting out of that trade. And then you start trading above zero line. So you're going to be out of that trade anywhere right between here when you start trading above that 10, 20, or when you get the MACD cross. I usually sell it pretty early on when I start seeing volume like that and a green candle like that coming in, because that's usually a sign of a reversal. So, you see from 10 a.m. to 10:45, you had a nice BDM cycle that you could take advantage of. And you just went from 520, 250 all the way down to 510. And that's a 12.5 point pullback there in 45 minutes on SPY. Going from 522.50 all the way down to that 510 here on SPY. So that's a 12.5 point pullback in a short period of time. And this right here is going to make you at least a 200% gain on SPY if you're trading the daily contracts that expire the same day. So that's the type of moves that we're going to be looking for tomorrow morning here. When SPY opens up, we're going to give it the first 15-minute opening range day trade strategy. So we're not going to trade anything until after 9:45 a.m. From 9:30 to 9:45 a.m., I'm going to be looking to lock in profits. I'm going to lock in profits on my SPY puts. And then after 9:45, I'm going to look to day trade and scalp SPY on the intraday 1 minute, 3 minute, or 5 minute chart, depending on the volatility that we're seeing for that day. So I'm either going to change this from a 1 minute chart. Here's a 3 minute chart. All that means is each one of these candles represents 3 minutes instead of 1 minute. And then here's a 5 minute chart. It's going to take out a lot of the noise intraday. So here you can see clearly on SPY on that 5 minute intraday minute chart here, you're seeing that you're getting up to that red 50 and then starting that next pullback, getting up to that red 50, up to that resistance, pulling back up to that red 50, pulling back, and it keeps failing at that red 50 when she does get that climb here. So that's what you're looking for on SPY. We can make quick, easy moves intraday there. We'll be looking for day trades. The contract volatility, we're seeing a massive moves in the markets here. So the IV is going to be higher, which is going to result in higher premiums for those option chains. But like I said, that also means that these candles are really moving here. So quick little move there, and we could be up 50 to 100% on that trade very quick. So if you're not already in the SPY puts, hold off on swing trades on the SPY puts. We're going to be locking in our profits on our SPY puts, within the first half hour of the day. And then we're going to switch over to intraday day trading and scalping there and seeing if we hold that 475 on SPY. If we drop below that 475, we're going to quickly see that 450, and then I'll target another SPY put there down to that 450 support, and then lock in profits once we get down close to that 450. But the big thing is going to be watching to see if we hold that 475 today. If we don't hold 475 today, I could see us getting down to that 450, and then Chinese tariffs are going to kick in. Their retaliatory tariffs are kicking in on Thursday, so I would expect to see the next larger drop coming in this week on Thursday once those tariffs kick in. And once they kick in, is Trump then going to do retaliatory tariffs? And if he does the same 34% retaliatory tariffs that China just did, then we're at 88% base tariff rate for Chinese products. And that's quite a bit there. I mean, that's doubling your prices on everything you buy. So we got to watch that. We had a large pullback here, about 17% over the past 4 trading days. So I think we're going to get that little bit of a bounce after today's large pullback. And then when Thursday's tariffs from China, those retaliatory tariffs kick in, I think we're going to see that next larger pullback there. And then we're going to see if Trump has any type of retaliatory tariffs on China. And he already has vowed to do that. So we'll see if he follows through on that. If he does, we're going to see the markets continue to tank and pull back there. And then we have Powell coming up. We got CPI numbers coming up on Thursday. So we got a lot of data coming out the end of this week here that are going to move the markets closer to the end of the week. So be prepared for that. We might get a little bit of a bounce early this week, and then Thursday, Friday, we might start seeing that next selling pressure. Right now, let's lock in profits on our SPY puts, on our swing trades we have on SPY. We'll lock those in the morning, and then we're going to be looking for those day trades and scalps throughout the day there and taking advantage of the market momentum and making those great profits that we've been doing on the day trades and scalps there. So really looking forward to the week, guys. I hope you guys had a great weekend. I hope you're prepared for the upcoming week here. I mean, it's been an absolutely insane week with all these tariffs and with all the news that's been coming up. And I think it's only going to intensify over the coming weeks here. So that will do it for tonight's class. I hope everyone is going to be live with us tomorrow, and I hope everyone has a great night. Let's take a look at the newswire here before we get off, and let's see if there's anything going on. Here's the newswire here. This one's from Benzinga. I mean, look at the headlines coming up here on the institutional grade newswire. S&P 500. I mean, look at this. The S&P 500 and the Dow Jones Industrial Average indices appear to be tracing a concerning pattern of consecutive steep declines, a phenomenon last witnessed during the Great Depression. I mean, that's absolutely insane what we're seeing here. But like I said, you could expect that to continue, especially if we have tariffs coming in. Interest rates remain elevated. The consumer is tight. They're not spending. And then, like I said, we got a majority of people that are going jobless. Delinquencies are on the climb. Mortgages. Mortgage failures. I mean, everything we're seeing in the economy is continuing to retract and pull back, and everything's contracting. So, I mean, the delinquencies are the most concerning. We get those delinquencies up, the housing market's going to collapse. The housing market collapse, and people can't pay for goods because, the inflation's so high. I mean, the markets are going to continue to pull back. I'm telling you that right now. And there's also news coming out there that Trump is going to be cutting a lot of benefits now as well to try to save what he's calling, an economic disaster there with our debt. So that's why he's trying to do all this. I understand why he's doing it, because we definitely needed to control our spending. We have record debt there. We're paying almost $1 trillion in interest per year in debt, which is absolutely insane. And we can't even afford that. So the government had to do something here differently, and Trump's taking it on, but he's doing it at the worst possible time here, given the market conditions with inflation, interest rates, consumer spending, delinquencies. It was a bad time to do those tariffs. If he did it any other time, I think it would have been fine, and the market would have shrugged it off a bit there, had a little bit of a pullback. But this is a different market. We're seeing a steep steep sell-off here, a steep decline, and I think it's going to continue because things aren't going to get better until the tariffs are resolved and there's some type of trade balance here and inflation starts to decrease. Because right now, over the next coming months, like I said, we're not even seeing the prices built into the into anything on the shelves yet. That's not going to be happening for the next week or two. So once that starts happening, and then the government data comes out, showing CPI and PPI, inflationary numbers coming out on a monthly basis, that they're higher than expected. Well, you know what? We're going to start seeing that next pullback when we're starting to see foreclosures on the climb here. We're going to see that next pullback. Fear. And we're going to continue to see that pullback. The market's had a big, massive climb over the past 4 years here, going from, S&P 500 here was at 200. We climbed 300% from 2020 to 613. So, that's a massive climb in just 4 years there. I think we got a lot further of a pullback, and I could definitely see SPY getting down to that 400 here by the end of this year, if not even sooner, maybe by the end of summer. So watch out for that. I would not be going long just yet. Like I said, we're sitting on a lot of cash here. The only thing I have been picking up is JEPQ. I love JEPQ. It pays a large monthly dividend. I've been adding to that on pullbacks. She's at about $44 right now in the pre-markets. So she's getting right back down to that 42.50 that I was talking about. If she drops down to that 42.50, I'll be unleashing and looking for a larger position on JEPQ. I'm going to continue to add to JEPQ here, but once we see a support and a bottom on JEPQ, I'm going to be putting quite a bit on that. Large monthly dividend, a great stock to buy and own long term there. So I love that one. It's my favorite. Anyone that's been with me for a while knows that I love JEPQ. I made a lot of money on that to the upside, and we sold it literally about um, somewhere between here, I know it was in January. So anywhere between January and February is when we sold our JEPQ there, and we locked in our nice profits, and then we had the market pull back here. And then we started selling our other positions about 3 days after the market started pulling back and we started in that BDM cycle. So we've been sitting on a lot of cash here. We've been trading SPY on the pullback. Once we do see a bottom, I think there's going to be some nice opportunity here. But right now, you got to wait, day trade and scalp the intraday volatility that you're seeing. And then once you get up to that support or down to that support and start to rally, then I'd be trading it up to that resistance for short-term trades. And once you get up to that resistance and see that rejection and start to fail and pull back with a candle below previous candle's body, that's when I would look then for a swing trade, maybe about 2-3 weeks out, and do exactly what we've been doing here over the past 2 months in that BDM cycle. So we'll be locking in profits on our SPY puts in the morning there, and then we're going to be day trading and scalping throughout the day. And I'm really looking forward to it. We're going to see that volatility. It should be some easy money here on our day trades and scalps, and let's take advantage of the market conditions. So I hope everyone has a great week ahead of them. And if anyone needs any help, I know we got a lot of new members here this week. If anyone needs help, please reach out to me, and I'll be happy to help you and assist any way I can. Please feel free to reach out. I leave my phone number in the live trade room there. You could text me, call me anytime you'd like. So let's have a great and profitable week this week. Another great week. Last week we had a profitable week, and we're set up. So hope everyone has a great week. Like I said, I still think we're going to see some further pullback in the market over the next several months here, given the economic conditions, the tariffs, inflation, and obviously consumer debts at all-time highs since 2008. And we're seeing that pullback. I mean, we're definitely in a recession. There's no doubt about that. We're in a recession, and we have much further to go there on SPY. So SPY should continue to pull back. I think we're going to see that 400 on SPY pretty quick. I'd say by the end of summer, I'd expect to see that 400 on SPY. We're at, let me see, what's SPY at right now? SPY is continuing to pull back again. We're back down to 480 on SPY. So we're right down to 480 on SPY right now, which takes us down to about here. We have that 475 as our first support. We break below 475, we're going to see that 450 within a few days after that. After that 450, I'd be looking, if we drop below 450, I'd give it about a month out and then target that 400 as our base support there. So I could see us getting down to that 400. 350 would be the absolute lowest I think we're going to head down to. But, Trump is just starting his term here, so depending on what he says and what he does is going to depend on how much the market pulls back. So the first step here is going to be watching and listening to see if Trump is going to do retaliatory tariffs against China, which China just put a 34% retaliatory tariff on our tariffs. So Trump's vowed to do retaliatory tariffs on anyone that increases them. So China did that on Friday. Now, if Thursday comes in and China's 34% tariffs go into effect, and then Trump announces retaliatory on them, we're going to see a next larger drop in the markets. So be prepared for that. And I hope you guys are able to join us on the live stream there, 9:30 to 11 a.m. and then 3 to 4 p.m. We're going to be day trading and scalping live as we do every day and taking advantage of the intraday volatility and market momentum here. Doesn't matter if we're dropping or climbing. If we're dropping, we're going to be trading SPY puts. If we're climbing, we're trading SPY calls. The volatility is here. It's going to be easy money. Let's have a great week. And if you need anything, please reach out. All righty, guys, take care. God bless. And I hope everyone here has a great week.